It was all bad news from overseas, but the Australian market was buoyed by those better-than-expected jobs figures. I spoke to Ken Howard from RBS Morgans a little earlier. Well, Ken Howard, given another weak lead from Wall Street, pretty good performance from the local market, really.
Yeah, certainly happy to see a positive day on our market, and a bit of mixed economic data, I think, helped our market along, with the Chinese reporting a very healthy trade surplus, albeit on the back of weaker imports and softer exports. So it's good to see the Chinese economy still drawing in plenty of capital, and the strength in our market was really in that resource space. So the space that had seen most of the downward movement over the last 5-6 days saw the recovery today. So your BHP, Woodsides, Fortescues, etc.
We just heard about those surprise employment figures. What would share market investors be taking from that?
Look, I think it's a bit of a mixed message for share market investors. Certainly the headline, seeing unemployment at a lower rate is certainly a positive. But when you look into some of the detail, we lost about 10,000 full-time jobs, which is definitely a negative, and put on about 16,000 part-time jobs. So, those stronger part-time jobs, while positive for households, certainly won't lead to the same step change in household confidence and retail spending. So that retail and consumer discretionary sector, which has been weak for several years now, is likely to remain so.
Let me ask you about a couple of stocks. Optus has put out its full-year results.
The results for Optus were reasonably flat. So we saw revenue for the quarter was actually down about 1%, although cost control resulted in profits being up 1%. So still a very, very competitive space, that telecommunication space. Optus put on their share of new customers, adding about 80,000 subscribers to their wireless customer base, but well short of the Telstra pace, which is adding about 500,000 a quarter at this point. So a very competitive space, and also in the news today, Optus seeing a High Court challenge around the sporting rights. So I think we'll still see plenty of activity there in telecommunications.
Yes, I'm sure. And AGL will have to wait a bit longer for approval to acquire the rest of Victoria's Loy Yang power station, but it's been busy playing up the benefits.
Yeah, certainly Loy Yang is a fairly strategic asset for the Victorian power grid. So it's about 30% of Victoria's power supply, and it's the lowest cost power station in the country by quite a long way. The negative for Loy Yang is that it's a brown coal power station, so the carbon tax won't be doing it any favours, but there has been an agreement struck between the federal government and the Loy Yang power station, which will certainly ease some of that pain. Now, if we cast our mind back about 10 years ago, AGL first appeared as a part owner of Loy Yang, and the ACCC wouldn't let them take control of it. But last year, with the New South Wales government sell down, we saw Origin pick up some very large power station assets in New South Wales. So certainly the view is the ACCC will approve it, even though it's taking a bit longer than expected.
Ken Howard, good to talk to you again.
Thank you, Tiggy.